Well, the escalating conflict between Russia and Ukraine definitely has made an impact on the global markets. First of all, commodities were rising across the board, especially for crude oil and precious metals. Brent and WTI crude futures once again hit the $100 per barrel level on Thursday before slightly falling back. Gold remained above $1,900 per ounce, up 5% from last month. U.S. stocks rebounded by the end of Thursday's session after President Biden announced further sanctions against Russia, but overall are still on the losing streak that started 2 weeks ago. China's A-shares and the Hang Seng regained some ground during morning trading after Thursday's losses. Meanwhile, U.S. President Joe Biden said the U.S. and EU are not cutting Russia off from the SWIFT global interbank payment system yet, but the options are still on the table. Biden said the impact of current sanctions on Russian banks are strong enough and that other countries hadn't agreed to any further sanctions yet. So far, German Chancellor Olaf Scholz has publicly opposed the idea of cutting off Russia's access to SWIFT at this moment. The Belgian-based SWIFT is a messaging network widely used by banks to send and receive money transfer orders. Now, earlier we talked to Chu Qiang, Assistant Director of the International Monetary Institute at Renmin University. He talked about how the current development in Ukraine may impact the global economy. Take a listen.
A lot of people say that Western countries like USA might use a punishment against Russia, for example, move their country code out of the SWIFT system, forbid them to join the World Trade and the clearing system. I think that may be the possibility because in 2014, when Russia had its move in Crimea, and Western countries have already made that discussion. But the thing is, they never actually implement the policy. Instead, they used a little bit minor punishment against Russia, that is to forbid several Russian companies and banks to have the loan and credit in the American market and other international market. But they still kept Russia in the system. The reason why for that is because SWIFT system, for one thing, is not controlled by America. America does have a very strong say and control in the dollar-based clearing system. That means they can forbid Russia to use US dollar. But SWIFT system is more like a currencies network connecting all the currencies all over the world. So if Russia is moved away from the system, so I think the bigger punishment is not only falling on Russia, but also it's going to be on West Europe countries. The Western European countries are probably the most important buyer for the Russian resources and energy. So if Russia cannot use the system to do the international trade, they cannot process euro, sterling, pound, and etc., which means European countries will have a higher cost or more trouble to buy Russian resources. Then we're going to see a colder weather, higher price, affecting American allies. I think this is probably West European countries wouldn't want to see. And I think more than the SWIFT system, I think more of the attention should be drawn to the international commodity market. Because both Ukraine and Russia are the probably two of the most important supplier for the commodities, especially the agricultural product. Russia and Ukraine are both the most important supplier for the wheat and also sunflower seeds oil and etc. Even though America and China are self-sufficient in the wheat and rice and edible oil, but for the rest part of the whole world, we're thinking they are priced at food and energy and will be greatly affected by this conflict.